Traders, welcome back to our price action trading lesson. We're going to use price action rules to help us predict directional bias for the market and where are the high probability setups. So as price action traders, we're using the rules to help us identify what is the structure and key entry points. And we have spike down and spike up. So overall structure seems like a consolidation. You can see big trend range, but our goal is still to keep looking for short-term channels, medium channels inside this consolidation. We have a downtrend break in extreme, reversal happen, uptrend break in new high, market is about to open, and prices keep trending lower. So now I have to ask myself, before I'm going to place a trade, what is the structure and where is the key entry point? And uptrend played out, downtrend played out as well, so I need more information, okay? Don't be afraid to be a little bit patient for market to develop more, because you need more information to understand what exactly is the bias. Right now, as you can see, the 12-bar EMA, the supportive indicator, is going flat. There is no confirmed trend in either direction, and there is no confirmed key level. So this is mainly an area where I have to be really patient, and let's see what's gonna happen. Okay, and we're breaking lower, so now we can see that structure is indicating some lower highs and low lows, but it is still quite sideways. Let's see what's gonna happen. Another low that is lower than this. So you can see consistency of lower highs and low lows. So we may have something on our hands. What's gonna happen? Break a new high, and now as you can see, market keeps creating lower highs and low lows. So what I like doing is connecting the highs and see if I can get confirmations, and I can actually have some nice channel. Okay, one swing, second swing, third swing, fourth swing confirmation. I'm gonna copy it, but at the bottom, can I get some confirmation of these lows? And I have some confirmation of these lows. So this is a nicely fitting channel. It's not the easiest structure to trust because for my liking, it's still too sideways, but it fits well. And I can identify the fact that the market keeps slowly but surely working lower. So you're paying attention to the structural highs and lows. Market is correcting, and now we actually have mini new low, first entry short, second entry short, and also new high for the central long pullback, second entry long failure. So we have double high probability setup for the second entry long and the mini second entry short. Problem is you have to enter below this bar. Now fortunately this bar is bearish again, but I would like to see this not to be inside bar. I can mark it more advanced, more aggressive, because you have the key entry point, you have the trend line, you have the EMA, correction phase ended with the break and the new high. So it makes sense right now to expect market have a brand new push phase. He pushed lower, we are correcting. New low for his entry short. Second entry short cannot sell above EMA. Market is pushing below EMA, so now my target is for prices to test the new low. That is the trend line rule. Okay, after there's a break, you expect prices not to reverse, but to test the new extreme. And because we have uptrend break and new high again, so you can see I'm not only following the main channel, the main trend line rule, but also these tiny correction channels, they have the trend line rule as well. And you cannot sell as long as the correction channel is in play. So I like to see some lower high confirmation setup to test the new extreme, because the downtrend needs a new low. There was no lower high, so we just created a break and pushed the new extreme. So downtrend played out. Downtrend played out, so I'm going to mark break a new low. And you have broad break, spike down, indicating depletion. So I'm pausing, looking to go short, because the downtrend played out, so I have no reason to sell as of right now. So we cannot take any short setup. In fact, we have quite a decent entry. We have a new high here, the high side of the pullback. First entry long, pullback, second entry long. And this is decent setup because after break, push to new extreme, downtrend played out, you can start anticipating possible reversal, possible wider channel, because downtrend played out, we are in a consolidation, so reversal makes sense. It's a bit more advanced, but it is a second entry long. You're pushing higher series of higher highs and higher lows, so this is great setup, second entry long. It pushed above EMA, it's confirming the trend line. It's important to really pay attention to break a new low, spike down. So you're not thinking about selling. In fact, you can picture a lot of sellers probably selling too late after downtrend played out and market push all the way up here. So now we have a bunch of channels on the chart, and also what we have to do is, let's say, plot this resistance, because we have now consolidation. Definitely looks like small trend range, flat EMA, consistent price swings up and down. We have overshoot. We have overshoot right here, which means we can have stronger correction in the opposite direction, and I have to draw the short-term correction channel again, so I cannot go long because the downtrend is in play. No good setup here. The downtrend is still in play. Cannot take high low. The downtrend is still in play. Horrible tail. It's too big right into the resistance. I have to be careful. And market reverse all the way down here, which can happen in a consolidation like this, especially if you can combine it with the overshoot, because overshoot can generate stronger correction in the opposite direction. Market has a break, new extreme again, so downtrend played out. And now it's quite hard to read this because we're in a trend range, so we have a new low for his entry short. We're pushing above EMA, and I'm thinking about failed second entry short above EMA. New low for his entry short, pull back, second entry short. Failure is what I would like to see, but we broke back below. So now this was the area where I was really patient because, okay, this is not what is supposed to happen if I'm thinking about buying, so I cannot go long, but at the same time, I cannot sell. There is no confirmed trend. I'm going to zoom back. You can see this is a trend range. I don't like drawing any bigger downtrend just yet. Everything seems too broad. I prefer to be following short-term trend lines. So I cannot sell because there is no trending structure. At the same time, because we push below EMA, I have to pause looking to go long for a while. I need some proven uptrend above EMA that is going to clear things up. And it's going to tell me that, okay, I can start buying. So you can see just massive price action. Hard to identify anything. You know, high low only. I can't take. It's not confirming anything. I was thinking about second entry long at the EMA. It would also be failed second entry short. But we're back below EMA again. So I cannot go long. I don't like selling lower high. We don't have no pattern. There is no reason for me to sell. It's too sideways. You know, this is difficult structure. You have to be careful. That's part being a trader. You have to recognize these areas where you know intuitively that you are gambling. You are taking a risk because once you have too many conflicting variables, that's how you know as a trader you have to remain patient. Okay, you want everything to align. You want to understand what is the context, what is the key entry point, and you want to predict the setup to form beforehand. If you don't understand which setup you expect in your future within the next few minutes, that means you're probably taking impulsive setup and you lost. So just got to be careful. You know, in hindsight, we have a couple longs here, but you know, it's only good in hindsight because you have one leg up breaks, you can expect second leg up. First entry short, second entry short, failure, high, low. But when you're watching this live, this is quite sideways. Yes, you're above EMA. Yes, you need the new high. You know, more advanced trader can consider. It's not the cleanest area overall. I was sitting on my hands here, but you're pushing above EMA, you're working higher. You expect second leg up, new high, so it's not a horrible setup. We push higher, we exceeded, so I was looking for something like this, and we can actually have nice confirmations off of these lows, and we have overshoot again, so I have to be careful. Okay, this is where I was thinking that I'm gonna take a high-low confirmation setup here, because we have a new high, first entry long, pull back, second entry long. So you can see as traders, price action traders, we're identifying the main structure, which is a trend range. And once I can just see potential trending structure, I'm automatically looking for some key entry point for some channel. And this is looking like potential bullish channel developing. We have a second entry long here, but there was no trigger for this high low. Had there been trigger, I would have liked it, but there was no trigger, so I cannot take it. I don't like going long now because we're back below EMA. We have the overshoot. You're supposed to stay above EMA, so no setup here. We're pushing higher. We have a break-in new high. Uptrend played out. We're breaking below, and now we have lower high. We have small resistance, one top, double top, triple top, small triple test. You're breaking below EMA. You can see it really looks like a trend range structure, just many consistent pricings up and down. Our current trend has a break, push to new high. So this lower high is actually decent setup, lower high confirmation setup of the triple test of the overall ranging structure. If you're expecting reversal, you want to see if failed second entry long can get it. We push so far down and we're back above EMA. Okay, what's going on here? Because this was the attempt by the sellers to reverse the market in the trend range and have a brand new downtrend established. You're not supposed to push back above EMA like this. So now I'm completely forgetting about any short opportunity. Okay, this is not what is supposed to happen. After breaking new high, you are expecting stronger downtrend. Massive push above EMA is telling me, okay, I cannot be selling. there's still some bullish imbalance. Yes, you have a second entry long. You have a second entry long, but it broke below EMA. You know, it's tempting. Your gut feeling is telling you it's gonna work after this push up. I really like to see the high-low confirmation though. Just one little push higher, high-low confirmation. So I can get it. No, there was no break below, no high-low. And market keeps working higher. So at this point, I like drawing even wider channel because we have so many high highs and high lows after breaking new high. It looks like we have a brand new trend established, but we have overshoot again. Well, this didn't last that long, but it's a price action rule that I have to follow. Once I have overshoot, I have to skip the very first second entry long because I can get stronger correction in the opposite direction. Nothing I can do. I cannot have wishful thinking. We have overshoot, so I just have to be careful. I cannot take this first second entry short. After overshoot, the downtrend is in play, so I just have to remain patient. And prices are trading all the way down here, so I can withdraw short-term downtrend, something like this. And market keeps trending all the way down. Now, I'm no longer expecting new high for this uptrend. Why? Because simply I can pay attention how deep the retracement is. Once you retrace over that 60%, you're forgetting about new extreme. That's a question that few traders asked me in the past. Okay, you're monitoring the retracement of the new trend. Once you get past the 50-60%, that's where you're no longer expecting new high, especially since we were in a trend range prior. You can see we were in a consolidation the entire day. So in trend ranges, you can easily pivot. So don't argue with the market in trend range. Withdraw the downtrend and focus now on short opportunities. You're breaking new extreme, but market keeps going lower, and we keep going lower so much after breaking new extreme. This means I have to withdraw some wider channel, something like this, because I have to explain the fact why prices keep trending lower so consistently after breaking new low of the initial one. Another push down, looking really good for the downtrend. We can't even pull back the EMA. You have a first entry short. I'm thinking about second entry short. Now we have a second entry short, but the signal bar was bullish. The secondary bar has a bad close. Now, we were in a trend range the entire day, so this is not super textbook setup because I'm really going to zoom out. You can see we are in trend range. You can go back into the trend range. I risked it though, but I didn't like the terrible signal bar. You have to use double bar entry, which is quite sketchy. I placed my deep limit order super deep, making my risk half, so I'm not risking as much because it is aggressive setup. It is not textbook setup because the signal bar is not great. Also, we are in the trend range, but there is a chance that this downtrend is going to get new extreme. I took a chance just to get a one little push down before we're going to go back into trend range. This is what's going to happen a lot of times because such a strong and clean push down without touching the EMA. You know, there's a chance you're going to create a few more points down, test the new low, and then go back. It ended up stopping me out, no problem. As power trading, this was an aggressive trade, so I have to take the risk with it. And now we're breaking back above EMA, so I'm gonna pause looking to go short. There's no setup anyway, and market keeps going higher, so I'm gonna withdraw uptrend like this. Okay, I can withdraw trend channel line here because we have bounce here, almost bounce here. First entry long, second entry long again. But the signal bar is not the best. I can draw also mini short-term trend line. I needed a high low. And we have another overshoot. You can see I get confirmations here. And a massive bullish bar at the top of the move. Spike up, depletion. This is very common. After overshoot, you can many times see kind of like a 90-degree sharp, steep spike out of the channel. And a lot of times you're going to see massive bars at the top or bottom of the move, because this is indicating the depletion, the ultimate profit taking. So once again, I have to be careful. We have a super tempting local second entry long. Very tempting because how big it closed. The bigger this bar is, engulfing all these previous bars, the less likely it's going to trap you going lower. But we just had overshoot. I was on my break here, but we just had overshoot. You know, more advanced trader can consider. But you know, after overshoot, it's better to be patient. It worked for big scalp. We corrected. New high first entry long, second entry long. almost double bar entry. You know, we're going quite sideways. Why this price action didn't push higher here? We're starting to go sideways. I prefer to be patient here. Overshoot is correcting strongly. Push lower. First entry short only. Break higher. So now we're expecting new high for this uptrend because we are retracing too much of this downtrend. We expect new high for the initial channel. Overshoot generated stronger correction, but there is no setup. Can I get a second entry line to EMA? Can we have a new high here? No. So we still expect new high. So I'm not thinking about selling. Okay, downtrend working lower, new high, first entry long. So I'd like to see second entry long like this, actually above EMA, something like this, because we still expect new high according to channel rule. Can we get a high low second entry long? No, because there is no trigger below. Actually, wait a minute, there is tiny break here, so there is technically first entry short, but there is simply no bar for me to go long above. Horrible tail here, so there is a hidden high low, but it formed really ugly. And now we have breaking new high, so uptrend played out. In fact, you have one leg up, break, second leg up, market moves in pairs of twos. Uptrend played out, two legs up, so I'm pausing, looking to go long. Spike below the EMA is indicating, okay, we have brand new trend established and we are in a trend range, so we can expect right now market to pivot. Yo, felt second entry long, it worked, but it pushed so far down. It pushed so far down. You prefer to have a felt second entry long, something like this. New high, first entry long, second entry long around this area, so we can catch the move down. It formed at the bottom of the move, even though it worked because we keep the stop loss here. I can't mark it. Okay, the downtrend is still in play. We're correcting. New low, first entry short, pull back. Now we have a second entry short while the downtrend needs to get new extreme. This is a great high probability setup. Second entry short. You can see uptrend played out with the break, two legs to new high, reversal down. You expect new extreme to be tested. Great second entry short, scalp mate, new low mate. We're going sideways. I don't think I can take anything. We're going sideways. No, nothing here. You know, you have mini second entry long, failed breakout, second entry long, failed breakout. But we traded down into this. Yes, consolidation is quite long, but because we traded down, it's more aggressive. And now the market is about to close. So this is the overall structure for today. Big trend range overall. We have to follow short-term to medium channels inside of a trend range, and you're basically following the trend line rule. It was not an easy day. It was super boring, super draining when it comes to your energy levels. So you need to make sure you're really going to take those breaks. But there are several decent setups that actually follow the rules. So I hope you had a good trade. I'm going to wrap it up, and I'm going to talk to you next time. Good luck your trading.